Hi, we're going to walk through exercises 6-12 and 6-13. Delgado Clinic's cash account shows $11,589 debit balance, and its bank statement shows $10,555 on deposit at the close of business on June 30th. So we're going to prepare a bank reconciliation as of June 30th. So we're given additional information in the problem, and these are the reconciling items. These items were recorded by one party but not the other. So to prepare the bank reconciliation, we're going to determine how these affect each balance. So to begin, we have our bank statement balance, $10,555, and our book balance of $11,589. So the ending balance from the general ledger and from the bank statement is the beginning point of our bank reconciliation. So the first item, outstanding checks as of June 30th total $18.29. So these are checks that we have recorded in the general ledger. We've written the checks, we've mailed them, but they have not yet cleared the bank. So we need to subtract them from the bank balance. On B, the June 30th bank statement lists a $16 bank service charge. So if your bank charges you a service charge or a check charge or some kind of fee, typically they'll record that the last day of the month. So the bank has recorded it, but we have not yet recorded it in our general ledger. So that's going to be a reconciling item. We're going to subtract it from our book balance. On C, check number 919, listed with the canceled checks, was correctly drawn for $467 in payment of a utility bill on June 15th. Delgado Clinic mistakenly recorded it with a debit to utilities expense and a credit to cash in the amount of $476. So when you have an error, the first thing to do is determine, is it a bank error or is it a book error? In this case, it's a book error. We transposed the numbers. So we recorded too much to utilities expense and we took too much out of cash. So we're going to record the error on our bank reconciliation, but only for the difference between these two numbers, which is $9. Since we took too much out, we credited too much to cash, the reconciling item is to add back the $9. On D, the June 30th cash receipts of $2,856 were placed in the bank's night depository after banking errors and were not recorded on the June 30th bank statement. This is what we call a deposit in transit. We have recorded it on our books in our general ledger and we drop it off, but the bank has not yet recorded it. Typically they will on the next business day. So we're going to add it to the bank balance. So we've gone through the entries and we're going to determine, just by adding and subtracting, the adjusted balance and make sure that the adjusted balance per the bank equals the adjusted balance per the book. And it does. So now we're going to determine, do we need to make any journal entries? You're only going to make journal entries for any reconciling items on the book side. So on the bank, these two items are just timing differences. We recorded them in one month and the bank's going to record them in the next month. So we're going to record the journal entries for these two items. So if you think about, this is our general ledger balance. Cash is an asset with a debit balance. We're going to add to it, so that's going to be a debit to cash for $9. And then the amount that we need to deduct is going to be a credit to our cash balance. So here's our journal entries. The first one on our error, we're going to debit cash and we're going to credit utilities expense. So again, this is for the transposition error. So we're just making the adjustment for the amount that we misrecorded. On the next item, the $16, this was for the bank service charge. So whatever your chart of account shows for this company, it's miscellaneous expense. It could be bank service expense, bank service charge, but we're going to debit the expense and we're going to credit cash. After we have recorded these two journal entries, our general ledger balance will now be the $11,582.